Good morning, Chicago. Good morning, world. It's Wednesday, January 4th. Here to talk about the markets. I'm Jeffrey Cohen, Chicago Quantum Investment Advisor Representative, and here to just share what I'm seeing. I had a whole plan today on what I was going to show you. And then the market just went haywire. And so I sat here staring at the market and pulling charts together and looking at things. And I still have so much work to do, but figured I'll share where we are. Just a personal note. Took a COVID test yesterday. It's negative. Just got a cold. It's in my throat. It's in my sinuses. Hit Sunday, 6 p.m. Started with a massive sore throat. No fever. Awesome. Feeling fine. Just so congested, right? And it hurts, so that's okay. So that's where I'm at personally. So interesting to watch the markets. Today the markets were doing great because short-term interest rates had fallen. Had risen, and long-term interest rates had fallen. And so it was a play on the markets. It was a play on like a recession trade, right? Like interest rates short were going to go up, long rates were going to come down. It was an inverted market, which represents a recession. And oh my God, everything was going to change. And huge moves, like 13 basis points on the short money. And so I'm going to show you what's happened because it stopped. If you look at the one-day chart on CoiFin, by the way, I like CoiFin. Thank you guys for producing this. We'll just take a quick look. 5 days. You can see how the market popped up and then came down. This was anyone's game. I was up like thousands of dollars this morning. Like it was great. I was thinking about where I'm going to go on vacation and all these great things that were going to happen. And now I'm not actually buying and selling the stock, so it's a lot of moot point, but that's okay. Very, very, very small positions relative to overall net worth, but still keeps me in the game, keeps it fresh, keeps it fun. And but you can see how the markets were up. They were doing, oh my God, great, up over 1% this morning at the small caps. But they're giving back their gains, and you can see like the S&P 500. I thought for sure the S&P was going to be making a run for 3,900. It looks like it's more likely to make a run for 3,800. So that's what happened. A lot of excitement. I guess I should have sold and bought and did all these things, but I don't know. Whatever. So that's not where we're at today. Where are we at today? Well, the first thing I noticed was that mortgage-backed securities continue to rise. We like to look at the uniform mortgage-backed security, the UMBS, at an average 5% rate. You can see, though, that the 30-year fixed rate is at 6.45. It continues to come down from the highs in the sevens. And this is great for banks, for investment houses that hold mortgages because, in fact, they're worth more. Interest rates go down, mortgages go up. Wow. You can see the 10-year Treasury's down 7 basis points. It's terrific for those who hold mortgage-backed securities, right? So we take a look at the 1-month Treasury. Now remember, I don't care about any of that. Remember how the Fed has set interest rates at 4.25 to 4.5, right? And so we're at 4.0 on the 1-month Treasury. So, in fact, we have not achieved the policy rate at the 1-month Treasury. Now, the 3-month Treasury, interestingly enough, let's make sure we refresh this. You're at 4.38. This thing has really gone up to really halfway to 4.5. And so what it tells me is there's some big money making bets that maybe there's another interest rate rise coming. And so for the 13-week, you don't want to be caught flat-footed. I get that. Now you look at the 1-year Treasury, and I want to just tell you a big picture. We're at 4.75%. I got very excited here when we were at 4.76, right? I was telling people, hey, put your money in there. We're back to 4.75. So the 1-year Treasury and the 13-week Treasury are higher. I'm just so surprised that the short-term money is running in here at 4%. That they could push that higher. Now, 10-year at 3.70 and 30-year at 3.81. I'm scratching my head. I'm a little perplexed on this one, right? I thought for sure we were going to be seeing 30 years above 4. Not seeing it. I thought for sure we were going to be seeing 10 years above 4. Not seeing it. And so question is, why is this, right? And so my guess is China's COVID, Russian war, US recession fears, but no recession yet, is pushing some big money to lock in, and even banks, why not, right? Lock in 3.7%. Your cost of deposits is 3.5, 3. On money with beta that's actually moving, right? Cheap, easy money is like free, right? Operational funds in a bank. So you can lock in 3-4% spread, net interest margin. You're feeling pretty good. I think that's what's happening here. But the bigger picture for me is short-term money was up 13 basis points. That is not interesting. That is my email. And this is kind of interesting, right? So Verizon's up. Corbis is up. It's so fascinating. And I look, and the banks are up, right? Dollars down, banks are up. 10-year, 30-year, 5-year, right? All of those bonds are up. Yields are lower, except the 13-week. And what you see in terms of the banks with the very high market capitalizations, forget any particular, by the way, we don't have any positions in banks right now. So this is just purely just talking, right? And you can see the banks are going up. Hey, it's great, right? Short-term money is more expensive, but hey, who cares? Because the bonds that they're investing in are going up, which means AOCI is turning positive, which means investment gains on investment held to maturity or available for sale. This is going to be great for banks in Q1. Big money makers right now. So banks are seeing this short-term pop. I get it. So I look at this and I think, okay, that's so interesting, right? I'm looking at some other stocks, whereas if you follow my show, you know what I'm looking at here. Let's blow it up a little bit. Oh, yeah. Let's take a look-see. What do we got here? I'm not going to tell you if you don't watch the show. You got to watch the show. So you can see a lot of these are green, right? Very interesting. This is where smart money goes to play. Wanting to make alpha. And this is where smart money runs away. Kind of interesting. Today the market is behaving more on the CQNS upside. CQNS up, CQNS longs. You can see some of these gains are going to be pretty big. You would have made a lot of money today. If you would have followed the CQNS up or long run today, yeah, you'd have printed. And so we're struggling because it's not so consistent. It seems a little more risky, but yeah, it's already a good situation. We're up. We got 48 grand in the market. We're up 2,800 just because Verizon's up, Corbis is up. Just feeling good about it. I mean, we're way down. We're down 143,000 on these positions. So, only up $200 now. Oh, that stinks. What are you guys doing? 2,000. All right, it's fine. It doesn't matter. That's not why we're here today. And so, quantum companies, take a look-see. It's always interesting when quantum is up. Love it. D-Wave. We got to help out those guys on D-Wave. So, what am I going to do here? So Corbis is up, and that's interesting to me because first off, it dropped to 1180. It might be time to double down again on Corbis. Now, Corbis did vote to approve a reverse split, and so I would expect this thing to be like $2-3 soon. I would. It's very volatile today on a very thin book. I'm not going to explain to you what I mean by that, but I'm just going to tell you it's a very thin book. This is the Corbis book according to NASDAQ Book Viewer. You can see just hundreds of shares. There's no real action here in the book. It's just drifting higher. There's nothing really happening, right? So if you put money to work, it's just going to cost you a little extra today. Take a look at the Corbis book. The other that one was CBOE. This is NASDAQ. If you look at the individual orders, it's not as interesting as maybe grouping them up. And you see it's 15 cents is where you start to see any kind of pressure. And here, there's no buying at anything above 10 cents. So you're at 10 to 15 cents. Got a kind of a little range there. But it's a 50% range, right? That's big money. If you're willing to trade Corbis, you can make 50% in theory on this stock in a day. So I love that it trades. We're in for the long haul. So interesting, no. God, I'm so sick. Woo! Awful. Yeah, the Russell's still up. So, it makes sense. Corbis, you got people betting on it. Again, I should be buying and selling this thing daily, if not weekly. I follow this thing all the time, but I just can't do it. I'm not a day trader. I take positions and I work on them, and that's what I do. So, there's where you are with Corbis. And, I mean, it's just going to start moving around a little bit. It's fine. There's nothing really happening with Corbis. It's just a low volume, low conviction day where the stock has decided to pop a little bit. I'm telling you, I could just jump right back in there, right? It's nice. Nice. Make some moves. 1270 is at the high, so it's 1240, 1270. Still 1240, 1270, 1240 to 1269, 1240 to 1269. It's just not much going on. So I look at this and I think not much going on. Now, there was a lot of news on iron ore futures being softer. Iron is softer, but steel is not necessarily softer. So let's take a look. I'm starting to get congested. I'm so sorry, guys, about that. I wish I wasn't. Nothing I can do about it. I'm just sick as a dog right now. But let's take a look at our... By the way, we're starting to publish some more research on leptokurtic, platykurtic, skews, and the difference between profitable and unprofitable stocks. It's time to cast the net a little wider for alpha. And so we're doing a lot of this now. It's kind of heavy. I got to tell you, it makes me not want to do it because it's so much work. It's a lot of work. And why am I doing it, right? For a couple of clients who hire us, it's fine, right? But it's a lot of work. It's a lot of work to try to master the market and to master the changes and trades that change. It's crazy shit right there. Let's look at crypto and miners. So this morning, all the crypto miners and crypto companies were up. And if you look, with the exception of a piece of shit Singaporean restructuring play worth $20 million, or worth worth $4 million, 4.4. Everything else is just, it's up. It's up. Crypto's up. But then when I look at stocks like Stelco, down, CMC, Commercial Metals, US Steel, Cleveland Cliffs, a lot of other steel companies, we're really starting to watch the steel industry globally for signs of a recovery. I'm not there. You can see globally steel is mixed at best. U.S. steel companies look good, but I think that's a specific U.S. play. You can see the S&P 500 is dancing to a different tune. This morning it was up. Now it's down. You see Bitcoin. Bitcoin's up almost 1%. Interest rates. It's hard to know. Where are we at? The only thing I see here is that maybe some small caps are looking up, but everything else is crap. S&P 500 was up a lot and is now coming back to today's kind of where we're at. And so that's my steel companies. Let's look oil and gas. Again, it's a bit of a global play here on oil and gas, and you can see a lot of red today. Not bad. You can see SMLP is up. By the way, I love SMLP. I'm thinking about getting back in. NGL is interesting. That's more processed water. So this is all like returns to assets. CEQP. These are master limited partnerships or asset-based or pipeline companies where you're really returning on a heavy asset base. You're returning like a cash flow. And hopefully returning a cash flow. USAC, right, selling compression rigs, KMI, pipelines. So they're looking okay. So pipelines kind of like your cash plays, your income streams. So what happens is income looks better when interest rates change. So if interest rates were to go down, oh look, they're down 4 basis points, then income looks better. Because I can't get the income from the bonds, right? So I get it from stocks. I'm willing to take the risk. 1-year Treasury at 4 3/4. If I'm smart money right now, I'm thinking about putting money away for a year. But it's still less. I still believe the risk-based assets are going to deliver 12.5, and now we're 4.75. You're giving away 2/3 of your income. You're giving away a lot of income. So talk to me. Give me some chat if you're out there. Give me some chat, people. AMA, ask me anything. I'll talk to you. I'm good. I'm good about that. But you got to ask the questions. Microsoft is down because they were downgraded because of cloud weakness. I'm not sure I'm there. I'm not sure I think that Microsoft is a company I would ever bet against. They are so well run. All right, so what's going on with SMLP? It's 1,300 shares. Nothing's going on with SMLP. Okay. We talked about oil and gas, so I'm going to get rid of that now. We got the Koifin look. Corbis is up. Again, I'm thinking it's a chance to load the boat here. There might be a play higher on this one, but there's no catalyst. It's just market movement. It's just movement for the sake of movement. 60 to 79. 60 to 79 is the best top of book here. That's fine. Look at Twitter. Up, Jolt's beat. Okay. Strong job market. Strong job market. Classy and Fibonacci liked it. Yeah. The battle for Texas independence. And the Chicago Quantum Exchange liked our tweet. I got to tell you, I did cry a little bit at the Alamo, the Mission de Valero. And so, and I'm reading a book right now. I don't think I brought it downstairs, but yeah, here it is. I'm reading a book now that is a must-read for anyone. It's an oral history. It's an oral history of the Korean War. And so one of the most important things, right, about war and fighting, and probably investing as well, is knowing that your people have your back, that they're not going to leave you. That don't leave me, right? I'm on the hill. I was wounded, so I just Naktung River. So the UN forces, U.S., Republic of Korea, and others were down in Korea by Busan, which is the closest point to Japan. It has a great port. U.S. troops can come in. UN troops can come in. And the North Koreans have taken 90-95% of the country, and they're wiping us out, basically. And so they created a bulge, Naktung, in the river, and they were ready to kind of come into the perimeter and wipe us out. And so they sent the first Provisional Marines, the Marine Expeditionary Force, and the first Provisional Marines were assigned to the Army 24th. You had the 23rd and 24th in there. And they had to take hills. And it was tough. And so, like, in that particular 2-day set of battles, maybe they lost 50 men dead. But they lost hundreds more wounded. And the only way those wounded, they got to either walk back or be carried back. And so you don't want to think that your people are going to leave you. And what they did was they stacked 3 battalions. They stacked them, right? And so, if I remember it right, A went in, just got decimated, like lost 80% of their fighting force. B went through the lines, continued, did a lot of success, but still got chewed up. And then C came in, which was G and H companies, and I carried the day, and they routed the North Koreans, and they took them back across the Naktung River, reestablished a perimeter, and allowed UN forces to do its counteroffensives. But what I always find so emotionally important is they knew they had the Marines at their back, and they knew that they were going to support each other, and were going to bring each other off the hills. And the thing about the Tejanos fighting, really they were aligned to Mexico at the time. They were Texans, but they weren't Americans, right? They were Texans. They were Tejanos. And they were fighting for independence from a centrist Mexican government that was going to take authority and power away from the Texas settlers. And so they fought to the man, and they died. And they knew this was going to happen because in a previous battle, they surrendered and 300 were executed. Because the Mexican commander originally thought he could pardon them, but he couldn't. He couldn't treat them as prisoners of war because they were citizens. And so he just executed all of them. And so they fought to the death, and they died. And that's when the United States realized that there's something here. And then they came in, and we won. Texas became independent, and that was that. And so, but I cry a little because I realized these men knew no one was coming. Now, there were supposed to be people coming. They actually sent for Bakar. They sent for a huge, 300-400 men were going to come. And they turned around and went back because they were like, oh, I heard the Mexicans might be attacking my fort. I better go back, as opposed to protecting my brothers. Nobody came. I mean, the truth is, there were 150. There were 100. They made all these calls for help, and another 50 brave came. So 150 died. But that's tough. I think about Texas independence, and I think 50 people knowingly gave their lives to fight the Mexican centrist federal troops, and just to fight with their brothers, their friends, and die. That's why I say I was crying a little at the Alamo. I felt it, and it's important. It's important. You should understand that this country, we had to fight for this country. It's kind of like Ukraine now. Ukraine will never think about Ukraine the same way after this fight with Russia, because they will have earned through blood their world. They will have earned their country and their place in this country. And so none of the kids I know want to fight. None of the kids I know want to fight for America. They want to defend our country. They want to defend our way of life. And maybe we're just soft right now, but maybe it's just we don't have an enemy strong enough to fight. But if it ever happens, I hope we fight, and I hope we honorably defend our nation so that we can remember what it took. It's a long time ago. We fought the British in 1776. It was a long time ago. We fought a civil war in the 1860s. That was really the last time America felt... I mean, the War of 1812 against England, fine. I don't think England ever meant to subjugate the United States. They just wanted to punish us. And the fight in Europe, World War II, and the fight in Japan and in Asia, those weren't really on our shores. And so I don't know that we've really felt the need to fight for our freedom. And so I just hope we never have to. But going to the Alamo reminds you that people fight for freedom all the time. And they're doing it now in Ukraine. And we did it hundreds of years ago. So that's why I say it's important. Focus, right? Focus. And so, all right, let's get rid of that. Let's go back to work here. Corbis. Corbis is not work. Corbis is like masturbation. You just watch it and you think, why the heck is this stock not $1? And it just goes up and down and people just make money every day. It's like the market makers. I don't know. Oh, S&P's up a little. That's nice. All right. So that's what's going on there. Anything else in the market we're talking about? Maybe. Let's take a look. So there's a few bits of news here and a few bits of homework I did, but I'm not sure we're going to see it anymore. Let's see. So we look at the market. We see Microsoft down 5%. Microsoft was downgraded by UBS on cloud computing weakness. Pfizer down 3.1%, down on Bank of America Securities, downgrading it, but upgrading Merck. So Merck's higher, Pfizer's lower. Honeywell, it's down on a downgrade by UBS, but I can't figure out why. GE is trading lower because GE Healthcare spun off, and so there's less there if you own the stock because you got a different stock. Now, Google, I don't know why Google is down today, or Amazon. This could just be some residual liquidity raising as we go into the new year. It's hard to know. You see semiconductors look strong. So this, to me, tech looks strong, with the exception of Microsoft. This is an interest rate play. I see financials up. This is a net interest margin. This is a credit worthiness. This is a macro play. Energy's down, which is still a recession play. Consumer defensive is down, recession play. I don't really know what's happening in this market, to be honest. I'm just telling you. But I know for certain stocks you have some upgrades, things like that going on. Baker Hughes, no idea why that would be down 3.3% today. You know, profit margin negative. Maybe that's why I'm starting to lose money. Rig counts are up, which should be good for Baker Hughes, but it's hard to know. Maybe they just got caught out over their skis. But you look at the market, right? It was up this morning and it came down. Nasdaq's coming down. So other big movers are, we talked about Amazon, we talked about Microsoft, talked about Google. dollar relatively speaking unchanged. 5, 10, and 30-year treasuries are all down. Yields are all down, which means the bonds are higher, which means people are stuffing money into their mattresses, their 5, 10, and 30-year treasury mattresses. And so I think about that, and it starts to make me feel like maybe quantitative easing is coming. Maybe this is a quantitative easing story. Maybe the Fed's buying again. That doesn't sound right to me. Let's look at reverse repo. Fred reverse repo. Oh, you. Hang on a second. Hang on, people. Did they really do that? Did they really do that? I am so disgusted. They're saying they're at 2.18 billion, but take a look at the reverse repo. This is basically, in my mind, this is Treasury secretaries sold by the Federal Reserve in the temporary open market operations. Look at that. You're at $2.5 trillion. What in the Sam Hill is going on here? You know what this is? This is the Fed pumping liquidity back into the market. What are they doing? So quantitative tightening isn't happening. Quantitative easing is happening. Is there a way to look for reserves? Is there just reserves? We could look at total assets. It's 5 days ago, though. Yeah, it's not updated. It's not updated enough. Could they possibly have reserve? We're not going to see it. I mean, they say that they took reserve balances with Federal Reserve banks. They're saying they brought them down to $3 trillion. To me, there's no way that that's right. That's going to pop up. I think you have an anomaly here. Big anomaly. Big anomaly on overnight reverse repo. I think something's going on. I think this is wrong. I think this is just wrong. I think something's going on with the data here. They're saying that they drained some reserves, but the last number I see is November. And so, but when I see this, it tells me why are banks stuffing their money overnight? I don't know. I don't know. I don't know why everyone's stuffing the money. So, let's see. How we doing here? Corbis. There's nothing going on. All right. So, I believe the Fed's doing something here. This is why you see these things break green. This is why you see the 30-year bond coming back up. This does not make sense to me. This is Fed gamesmanship right here. The Fed's doing something funny. That's like the story. I don't know if you heard it, right? There's a story of these cops. They were investigating a case of murder and cannibalism. And they see a guy, he had killed a clown and he was eating it. It's disgusting. And he turns to the cops with a leg and he goes, "Does this taste funny to you?" Because it was a clown. So my point is, something tastes funny, and I think it's the Fed is gaming 30-year, and the Fed is gaming 10-year interest rates. And I think that we just all have to be thoughtful about this. This should probably have been the whole video, is that something's going on with money right now. I don't like it. It makes no sense to me. Why is the Fed playing games? Why is the Fed playing games? And as a result, of course they're going to pump up the craziest stocks, right? Look at this. I'm just telling you, I'm thoroughly concerned. Takes the S&P up, takes Coinbase up, Synaptics, Nvidia, EBIX, all your riskiest stuff, your high beta, low, actually it's high beta, low risk when you put it together, but that's a secret. We don't talk about that. And when we look at our dog shits, right, like Desktop Metal and stuff like that, higher. People are banging these things higher. They're short squeezing them higher. And so, all right, it's fine. Tupperware is up. Tupperware. Oh, yeah. It's a crazy market today. Mortgage-backed securities up 0.3%. Or three. Oh, that's not much. It's actually coming down. All right. Yeah, we're only 4.5 basis points down on the 10-year, but still, there's no reason. Take a look here. Yeah, 4.395. You know what this reminds me of? So, I want to tell you a story, right? Get my ruler out. Here's a ruler. This is the Fed yield curve, okay? Normally, it slopes up, right? Short-term money, long-term money. So if I give the Fed a dollar for a day, I expect less interest rate than if I give the Fed a dollar for 30 years. But what you have here is you have an inversion. And what it says is if I give the Fed money for 13 weeks, I expect 4.4% of my money. That means money is expensive, money's hard to come by. But if I'm willing to give the Fed money for 30 years, I only need 3.81. Flat, maybe I understand. Up, totally makes sense. This tells me money is fleeing risk into treasuries. And I don't get it, and I don't get it, and I still don't get it. I don't understand why you can earn 4.4% of your money in 13 weeks. Banks must be starved of liquidity, or people just want to shove their money into Silvergate Capital. Up 10%, and they want money now. The hedge funds want it now. And they're willing to pay 4, 5, 6% annual money to just push their money into the market today. So I think that's really what's happening. I think this is a liquidity game right now today. And I don't know how you trade it. I think you just look at it and you think, what the heck is going on? What in Sam Hill is going on today? Take a look at our holdings. Oh, we're up 8.4% today. Holy shit. Just saying. There's no reason that our portfolio is up 8.4% today. This is crazy. It's crazy. It's crazy. So what I say to you is this. Be careful out there. Money's tight. Short-term money's tight. Margin calls. Think margin calls. Think pain in the short term. Think banking crisis. But if you look at the banks, There's no banking crisis. This is why you have to look deeper in the data. If you look at the banks, there's no crisis. KBE is up 1.6%. KRE is up 1.8%. That's large banks, small banks. The highly valued banks are all higher. They all look great. Oh, yeah. Let's shove some money into some banking stocks, right? Because everything is awesome. Well, it's not awesome because the money's tightening up. The short money is tightening up, and the long money, great, right? Great. Nobody wants long money. Everyone wants short money. That is a bad sign. That is, see, banks and investment houses and people that borrow short and lend long get caught in a market like this. This is not a good market. It's a dangerous market. This is all you have to see. 14 basis points for 13-week money. It's up 14 basis points. I mean, but then you look and the longer money is actually down, right? And so, yeah, this is nuts. Nutso, right? It's nutso. It's crazy. And then I look and I see this and I think overnight reverse repo agreements. Treasury securities sold by the Federal Reserve in temporary open market positions. So when they sell the securities, they take the cash. They take the cash overnight, but they're paying interest on it. They're paying 4.25 on it, 4.5, 4.25, 4.25, right? Taking all this money and paying on it, and they're basically just draining our US Treasury and giving that money to the large depository banks. They are propping up the banks today. But you look and everything else, oh, December 29, right? We look like we're heroes here. Oh, yeah, we took our total assets down to 8.6, right? Reserve balances with Federal Reserve banks, right? Their balances are down. Well, that tells me maybe there's problems, right? But it's not a lot. It's not a lot of money. Sure, it's down $1 trillion from beginning of the year, excess reserves, but that's still a lot of excess reserves. And then you look at here, just total reserves. Yeah, they're down $1 trillion. It's a lot. There's a lot of reserves that have been drained out, but maybe it was too fast. Maybe the wrong banks. Maybe the wrong banks drained. And now there's trouble, and they're saving some banks. So that to me is a story for another day. Let's leave it. I had all this data I want to share with you. I am actually going to make those videos. I will. But let's take a look at if there's anything else I want to talk about. So, of course, there's Corbis down to 12 cents. And again, right, I look for where my cliff here is. It's at 15 cents. One order for 203,571 shares. Really looking to cash in, looks like. Take a profit. I think it's fine. And then in terms of buying, the real cliff here is at 100,000 shares at 10 cents. And so someone's really positioned to let this thing run within a 50% range. That's fine to me. Shutting that off because I don't really care. I'm not going to trade it. We look at Verizon. Verizon's up. It's a sexy chart. You got more shares off buy, bid than you have ask. That's nice. Verizon's up. Anything else worth talking about? Let's see. Maybe I got some stuff here. And then I'm going to wrap up the video. I'm not getting a lot of comments or anything, so it's fine. Yeah, just not a lot happening here in Corbis. It's just day-to-day trading, which is interesting. You think about it, right? Do I sell at 12, 13 cents a share and get out, or do I let it ride? Right now, we're letting it ride. Possibly a mistake, but I don't know. I'm not I'm not convinced I know anything to do in this market right now. It's a bit of a crazy market. And so it's just so interesting. I think we did find something really important there. So, all right, I want to thank you for watching. This was our kind of morning talk through the markets and what's happening with interest rates. And we're going to take one last look at interest rates and see if it still holds. And if it does, then it's a good story. So S&P 500 recovered. Okay, that's fine. 10-year bond is down almost 9 basis points, 8.6 basis points. Silver and gold are up. Okay. So people are, it's a flight, it's a recession flight. It's a, maybe things are happening in China that I don't know about, right? Driving things. So that's fine. I mean, our holdings are up, which is crazy. We're up 6.25% because of Verizon and Corbis, which is great. Thank you. I need money. Money is good. I'll take it all day. Look at the banks. My guess is the banks are still up. Banks are doing great. Look at that. KBE, KRE, they're up. It's a good time right now to be a bank. Excellent, right? The banks, look at those valuations. They're all going higher. Banks are solid. They're healthy, right? Fed's propping money into them, making it look easy. And now this is interesting. SIVB, that's the bank for private equity and venture cap companies. This is where they put their money. And now it's up 4.5%. And so it tells me is this is a complete risk-on play. Look at Silvergate. Silvergate lends money to Bitcoin miners. Silvergate's up 18.5%. Okay, risk on tells me that people are scrambling to pull whatever money they can out of the system and put it into stocks today. I have no idea why, but they are really driving up the Chicago Quantum Net Score longs. They're really driving up those smart risk assets, and we see it here with the long bonds. Long bond yields are high, they're lower, and short bond yields are higher, which means money's needed now. Mortgage-backed securities, we talked about this, up slightly, so interest rates down slightly on the long end. 1-year Treasury bills up 2 basis points. 1 month up 2 basis points, slightly under. 13-week up 14 basis points, slightly under. 1-year Treasury roughly flat at 4 3/4. 10-year Treasuries are down 5 basis points. It's moderating. 30-year Treasury bond is down 4 basis points, also moderating. Corbis continues to be just a sexy high flyer. Woo-woo! Love it. Probably riskiest stock in the United States. I would not be putting any money in there that I can't afford to lose all of it. Interestingly enough, Honeywell is still down. Microsoft is still down. These are big companies. Hershey's is down. 30-year bonds, it just feels like a rescue. 10-year bonds. I'm telling you, the only player big enough in this market to do it is the Federal Reserve Board, New York. The Federal Reserve Bank in New York looks like they are, I can't even imagine why they're doing it. They're pumping reserves back in the system. They must know something. Maybe they're doing it because of China COVID. That would make sense, actually. And so ultimately, that's what I'm going to go with. This is a China COVID worry. Get rid of that. And it's just a bad day, right? They're worried. They're worried that China COVID is going to have worldwide contagion effects. And it's fine. It's fine. Just but what happens is you start pumping money, and you start pumping money back into small value stocks, small growth stocks. You start driving markets higher, reinflating the asset bubble. I don't like it. I don't like it at all, and it goes kind of against my sensibilities. And so I understand it though. But look at this. If we do a 1 month, right? Stocks had fallen. Maybe the Fed's like, oh, I don't want stocks to be falling that much, right? And now maybe clawing them back a little bit. And so, all right, we're fine. I'm going to call it. So real estate is up, communications is up, financials is up. It's all interest rate play. So thanks a lot for watching. If you like the video, hit the subscribe button. Really helps us. We're not paid to make the videos, and so hitting subscribe is tremendously helpful. If we get 1,000 subscribers, we can start to think about monetizing our YouTube channel and making coffee, basically. Free coffee every day. Love free coffee. I love coffee, and it's expensive. So hit the subscribe button, watch a few videos. It really helps us out. And ask a question, drop a comment. I do look at the comments and respond. I love it if you gave me topics you want me to talk about next time. You see I'm pretty free-flowing here, and I'd be happy to help you. And if you want to learn more about our business, you can go to our website, which is chicagoquantum.com. We have advisory services for investment advisory. We have project services. And I got a whole crew. I've been in a consulting business a long time. If you wanted a consulting job and you didn't want to pay too much for it, I could get you some really great people. And I would be willing to help as well. Market info, all free. Tons of data for you to look at. Our most popular page is the negative beta stocks page, which we just updated. Chesapeake Utilities, Berkshire Hathaway, and Veru are your negative beta stocks right now. Not that many of them. Then we have an alternative investment opportunity for those who are willing and able to take the risk in an investment science perspective, right? Make money, make alpha based on investment science as opposed to in things like fundamental research or technical analysis. We have a little bit on quantum computing. I really do need to put more in there. Blog post and post quantum crypto. So thanks very much for watching. You take care now. Bye-bye.